Hey there, everybody. Thomas with Basecamp Trading. It is Wednesday, April 22nd, and we're going to talk a little bit about how to take advantage of low oil prices and what to invest in, because what's happening is a lot of people are just piling into USO, which may not be the best option. So, for example, if you take a look at USO here, it has absolutely gotten crushed, and they're about to have a reverse stock split, which should push prices back. Well, we'll bring the price back up, but then we'll oftentimes lead to another crash. So understand, when you're buying USO, you're not actually buying oil. What you're buying is futures contracts. And they used to only trade the front month of futures. Then they went to 80% front month, 20% back month. And then they went to what they just did yesterday, which is they're not really saying what they're in. They can trade any contract month. But it seems like right now it's mostly front month and then the secondary month, and then they have 5% in August contracts as well. So when you're buying USO, you're actually buying near-term future prices. Now, the problem is right now, futures contracts for crude oil are trading in contango, which means the further out you get from the current date, the higher the price of oil is trading. Okay, because they're expecting demand to come back. Now, the big thing that's led to this huge crash in oil is we had excess supply due to the Saudis and Russia having a price war. And then we also had unprecedented drop in demand due to COVID-19. Those two things, when you have excess supply and zero demand, causes the oil market to collapse. It causes any market to collapse. Okay, that's why we're seeing near term, the futures contracts are very, very cheap compared to further out, where you look at December, you're trading like $30 or so a barrel. Now, the problem with using USO is contango actually works against you. As you're buying, as they roll to the next contract month, that contract's gapping up. So you're not participating in that move up in price. Even though your price might be higher for oil, you're not actually participating in that. There's a bit of decay that's occurring with USO. So it may not be the best option for trading long-term oil. That being said, I have about 1,000 shares of USO right now that I'm holding on to, but I also have a whole lot more in other oil markets or other stocks right now for oil. So some of the things that you can look at that will help you take advantage of the rise as demand comes back in and supply decreases because of OPEC and everybody cutting production. Once demand comes back, prices should start to take off. And the way I've been positioning myself for that is, for example, buying companies like Exxon and Phillips 66. So Exxon is XOM, Phillips 66 is PSX. You can also buy BP, MBLX, ConocoPhillips. All of these are options for getting into actual oil refining and or production for drilling. And as oil prices come back up, that will also help those stocks. And in the meantime, you also are getting dividends from them as well. Now, remember, it's not going to get fixed overnight. So all of these trades are intended to be long-term holds over the next 12, 18, 24 months as we see CV-19 cases die off and we see demand and travel and everything go back up. We'll see demand for oil and gas start going back up as well. So keep that in mind. That's couple different options for trading long term that, in my opinion, are better than just buying and holding USO. But that's it for now. I hope it helps. Don't forget to like and subscribe if you haven't already done so. And just a heads up, I'm personally have shares in all of those companies. So just be aware of that. But that's it for today. And until next time, happy trading, everybody.